From the stock market's perspective, that is fabulous news. Financial and tech companies will get a lot more business. Many U.S. tech companies have shied away from China because of the ridiculously lax intellectual property laws and promotion of intellectual property theft. Larry Kudlow believes that can change. Our financial companies have been shut out of that lucrative Chinese market. Now the government says that will change. I think that means MasterCard or Visa might be able to issue credit cards over there, maybe both, and the banks like JP Morgan or Goldman Sachs will be able to have their own franchises free of meddlesome partners. That's got me musing on the possibility that China will allow Apple to offer its credit card that we have here and only here there, too. The whole credit card industry has been praying to get into China to no avail until now. Numbers could go up gigantically, which means the group likely has more room to run. Are the $200 billion worth of purchases for real? Well, Larry thinks so.
For both teams, for both sides, this is a pro-growth deal. In fact, we think it's going to add to the growth of our economy by at least a half a percentage point in 2020.
Now, Reuters is saying with a story that came out mid-afternoon that it's a lot more complicated than that. They point out China still has tariffs on the goods they talk about purchasing, and they haven't rolled them back yet. Now, in fact, when the story broke, it caused the market to reverse hard, even as I think that the story doesn't even matter. If the Chinese government wants to purchase this stuff, they're going to purchase it. It's going to happen. And given that President Trump won't roll back our tariffs until they place these orders, well, I would think they have a pretty strong incentive to keep their word, don't you? The stocks that rallied hard, stocks like the transports, tell me the market agrees with me. The transports are my barometer, and they finally broke out to a new high. You know I like Union Pacific, but have you ever considered buying FedEx over this? Now, they spend fortunes building out their Chinese business, and it had just gotten to the point where it could be immensely profitable before the trade war pretty much shut them down. Now FedEx can make a comeback, and its stock was actually down today, down a lot, off almost $3. I'll have more about that particular segment of the economy later on the show. Stay tuned. Many have doubted the prospects of companies that have spent fortunes building out liquefied natural gas trains to export liquefied natural gas, LNG. But Sempra Energy, Dominion, Cheniere, and Tellurian will be rewarded with a huge customer base that can easily get hooked on our nation's plentiful natural gas. Hey, we're the lowest cost producer in the world. Maybe the single-digit Tellurian, the one that was started by Sharif Suki, maybe it's worth speculating on. Don't forget, we make more than just planes and heavy machinery. The Chinese can buy medical instruments like the ones I heard about here at the JP Morgan Healthcare Conference. And let's remember that IBM, Emerson, 3M, Honeywell, nice move today, United Technologies all have tons of merchandise to sell. Needless to say, Apple's a winner, too. Oh, and in case you need more companies, the president named dozens of them in his press conference today, which at times felt like he was reading a list of the Fortune 500 and asked them why they haven't thanked them. All the while, he kept the Chinese standing there waiting. I don't even know which one to hit. It was all very good for stocks, but the market's collective eyes glazed over. Some of that's because a lot of the trade deals were already baked in, but there was plenty of new stuff here that got completely ignored or that the media chose to ignore because, well, it's hate him or like him was positive for him.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.